This is Rod Kusanen, Spooman for Risk on August 18th, 2016, all times on the Charter Central Standard Time. Question has been raised what we were able to ascertain about the trend on the 18th. So in hindsight, we're going to look at some of our indicators and a threshold indicator on the premium to get an idea of what we were able to find. When we opened, we were right up at around 81, right here, 81.5 on the high, and the composite market profile indicated that we would be up looking to head upwards of 82.25 on this particular indicator. It's a nice indicator, by the way. We can do a lot of things with this, but 2182.50, pardon me, was the upper value area on this particular date. If you're not aware of it, what's nice about this indicator is the ability for us to carve out a particular period of time, which we've done here, from the low pivot on July the 6th to the 17th, the previous date. The upper value area shows up at 82.50, as you see there. So that was pretty much the target on the 18th, and we managed to breach that just a little bit before it began to drop. But what was really compelling about this drop was the IB. All right. Now the initial balance, most of you know what that calculation is all about. But the first standard deviation marker showed us being right up there at 83.75, and that's right where the market headed from the initial low. So usually when you've established your initial balance, which you had there by 9:30, your target, of course, is going to be right up there. Now, as it went there, all right, the timing also had a little bit to do with this drop, right around 10:30, and that's been pretty reliable through the course of the week. Right around 10:30, the market begins to rethink what direction it's going, and that's what we saw happen on the 18th. On the YM as well, it moved right up to that initial balance projected area right in here. That's an actual 1.5 standard deviation line. And then if you look at our other indicators, pardon me, the other markets on the 18th, the same was true of the INDU and the INX and the VIX. Now, of course, the VIX was really right down at the initial balance at that particular time. So the VIX was a bit divergent, in other words. So everybody had, all the major markets had made it up there to that standard deviation line when the markets began to retrace. And of course, you could see what happened as we came back down, came right to the standard deviation line below the initial balance, and the INDU pivoted and turned and went right back up again. So all of that was somewhat predictable just by virtue of where the markets, where these standard deviation lines were drawn. And this, of course, is done automatically. So you had to keep an eye out on all of those things, and allowing you to take advantage of the initial rally. But as you saw the market begin to flounder up here, then just by way of pattern, you would anticipate that perhaps there's going to be a drop, especially because of the timing. Now, we'll take a look at the daily market profile as well very quickly here. The INX makes it up to 86. The composite market profile put us at 85, I believe it was, right around 85, so that got hit. And then, of course, it failed to make a new high right in here and began to drop. So failing to make a new high in here was real compelling. But could the premium have helped us to anticipate this drop? And the answer to that is definitely yes. So what we're going to do now is go back to the premium indicator, and we've got a new little toy that we're working with. It's not completed yet, but it's going to help us as we work with our threshold lines. Now, in particular, what we're interested in here is the lows, to see whether there's anything on the lows that would really help us on the premium to see that there was going to be a retracement. Now, the rule that we use for determining the lows in a rallying market is we look for a lower low on the premium in a rallying market, a lower low, not a higher low. So in a rallying market, what we're going to do is we're going to look at each of these pivots here, and after a reasonable period of time, see which of these was the lowest. And in the first half hour, you've got this low here at negative 301. All right? So if that threshold is reasonably accurate, we can project that line forward, which we're going to do now, and we can see that this low right in here, according to the premium, in fact, both of these, here and here, are suggesting that we're going to be looking at a retracement back to these levels, at least back that far. So whether it's here or whether it's here, all right, doesn't really make too much difference. Okay, if we look at this particular low, this was already fulfilled by the drop back to that level. Okay, so if you look at this drop in the premium, it's indicating we're going to test that low, which we do right over here. At that particular time, the low on the premium was higher than that level, and therefore the market resumes its rally. But the real question was right in here, because that particular bar or set of bars there was below that threshold. Now let's take this forward a little bit more. Then we come over here, all right? Now, we're going to ignore that pivot because at that particular time, that pivot bar on the premium was above this level. So we've got nothing showing that's indicative of a pending drop. The only thing we've got to work with is over here. That's the only thing we've got to work with. Now, as you see, the trend here from this point to this point to this point, there's a bigger trend on the premium here that's suggesting we're about to come down. So you've got to take that into consideration as well. So when the market rallies up to the projected area using the initial balance calculation, you've got a pretty good indication from the premium that something's going to give here. And of course, right after it hits the top, and you look at these particular bars, this low here, that's out of character for the premium. This is a much lower low on the premium, higher low here. That's That's just classic indication that we're going to be coming back down. And then even another lower low here at a higher low, also a further indication that this market is looking for some kind of a drop. So as we get what the premium had projected coming to fruition, we then have to, rethink how we're analyzing the premium. We're going to show you how we do that in just a second. But could we have anticipated the highs here? So let's go forward and look at the highs and how we run the high calculation. Now, the initial pivot bar here gave us a projection, a threshold at negative 196. Okay, negative 196. So what we would be looking for as we move forward is a lower high on the premium with a higher high, okay, on the ES. And we've got that situation going right in here. Now that's a little after 9 o'clock. Okay, so what we'll do is we'll terminate this particular line and just reset our timing. We'll just say 9 o'clock here. And we'll run this up until about 10 o'clock. Okay, now we're only concerned with the highs. So let's expand this out a little bit more so we can see this more clearly. It looks like negative 232 is our pivot bar right in there. So we'll extend this out. And that winds up being real accurate. Because as we move higher, we haven't really quite moved into a new high here, but we can see how the premium has dropped off just below that line, okay? And we get this corresponding drop, as we mentioned. And then we rally up again, and here we're at a higher high, but as you can see, we're above the threshold at this particular time, indicating that this market should continue its move upward. And now we get to the highs right in here. And you can see that on this bar, okay, we're still way above that line, way above this particular threshold. And as we look at the majority of these bars, it rather appears, okay, it rather appears that the threshold may be too low. But using the rule, it would suggest that this market's going to retest this high at 84, 84 and a quarter. Okay, so that is the thing that would probably be the most difficult to analyze, is the fact that we were way above this this threshold that we created, and suggesting that that area needs to be tested. Okay, so we'll just leave that line there. But as the market begins to flounder a bit here, let's just move forward to the final drop. We get this last bar high right in here. Okay, now let's take a real close look at the premium at that particular time. And we're still above that threshold, all right? We're still above that threshold. And then we start to drop in here, just below, and then we finally get this more precipitous drop going on in here, but we're still above that line until a little bit later. So all in all, it would seem to us that that threshold line was not properly set. That's all that I would have to be able to say here. That threshold line seemed to be too low, and that can happen. Okay, so that really what we would normally expect the market to do is just barely make it to these threshold lines when you get your pivot. Barely make it to the threshold when you get the pivot, any sizable pivot at least. So over here, okay, which is where that where the premium was at negative 232, that made sense. And then over here, it was below that threshold, so that also made sense. And then in here again, all right, there, of course, we're much higher. That's predictive that this market's going to continue to come up as well as these bars. But way up here, it's still indicating to us that you know, this market should be climbing. So were we wrong, or what? Pardon me, was the premium wrong? Not really, because although the market did drop, as previously forecasted by the lows on the premium, the fact of the matter was the market rallied right back up before the end of the day. Okay, so we came right back up just as the premium indicated we would likely experience. Okay. So yeah, was it tough? Sure. Yeah, that was tough. That was tough. Now let's reconsider how we're going to look at this premium after we drop into the low in here. Now this wasn't the low of the day, all right, but it certainly was below the low predicted by this particular level on the premium, right in there. So we breached that, and we came down and saw how the profiles indicated that the market would likely experience some kind of a bounce there. And by the way, let's just go back to the profile for a second. All right. So from up here at the drop, the market came all the way down, almost to this projected low value area here, breached it on the YM, came right down to that area on the INX, and then on the INDU even further below before the market bounced and came back up. So now let's go back and look at what the premium was saying as we moved down. So this low gives us a higher low on the premium at negative 272. So we're going to extend this line out, and you can see as we move down, all right, during the downtrend, all right, that's where we're paying attention to this line. During a downtrend, we'll go lower and lower, all right, and then right as we come into this low here, you can see where the premium is relative to that line that was established way back at the beginning of the day. right? So we're above that line at this low. Now we start moving back up, this line becomes irrelevant, right? This line is no longer relevant during a rallying market. It's only during a falling market where we are going to be concerned with that line. So the premium was accurate on the low side when it came to that rally and that bounce off of this low. Okay, so from this low, what we can also do is begin to recalculate the upper threshold. We're going to recalculate the upper threshold because of this drop. Because we don't know whether this is going to continue on back up and retrace again. We don't really know that, other than the fact that according to the premium, we're going to test this 84.24 later on in the day, because we were way above that line previously. So let's go ahead and just try this. We're going to restart that process at 11:36. I honestly don't know what we're going to find when we do this. Well, let's not do it that far. Let's just take this up to about 12:30. All right, let's give me a second on this. All right, so from this low, we find a threshold at negative 221, which we're running with, as this is looking to be pretty accurate here. Especially as we get up here, you see how the premium has dropped off. We get this corresponding drop. And then we come down to this low, we can see how the premium has responded to that drop. We're going to continue to drop a little lower. And this move here, let's pull this forward, is kind of predictive as well. You see how low the premium is? We've seen these drops in the premium. There's some divergence here, but that's still a pretty low bar on the premium, so that's kind of indicative of this this price being tested. But we're running back up to 84.25 according, and the premium is well above that threshold level till right in well, even here, yeah. But then we drop off right in here. We get that little drop. It doesn't last very long, and back up she runs, and then takes us into that final high in the last few minutes of the day. But that bar on the premium there was kind of predictive of a pending drop, which we saw take place in the following day. All right, so that's our quick analysis of this market for the day and the information we could glean from the premium and the various trend indicators, market profiles, and the IB particularly useful on the 18th. And that's our video for today. I'm Rod Kusin, Spooman for Risk.